Welcome to Matters Financial and Geopolitical from a Frontier. Thank you for stopping by. I hope the week's gone well and that the May Day holiday was enjoyable. Sub-Saharan Africa, Africa Confidential, at the heart of the contest talking about Sudan is the fight for control of the interim regime, whether ultimate power should rest with the military or the proposed civilian council. And I said in an interview in January to Al Jazeera's Sami Zaidan, what we're watching across this continent is a kind of tipping point moment. Subsequently, I wrote an article about the world's end, and I quoted Antonio Gramsci. The crisis consists precisely in the fact that the old is dying and the new cannot be born. In that same article, I said in Africa in particular, a lot of leadership is in the departure lounge, but Bouteflika is surely the most extreme example. According to Africa Confidential, the IMF had in January already reduced its October 2018 projection for real GDP growth in sub-Saharan Africa in 2019 from 3.8% to 3.5%. Slashed its projections, this is the World Bank, from 3.3 in October and 3.4 in January to 2.8% now. Says overall sub-Saharan African growth decelerated between 2017 and 2018. IMF since October has reduced growth projections for Africa's three largest economies, South Africa, Angola, and Nigeria. They're creating a dampening effect on SSA. They remain a drag on the region's growth and are predicted as a group to register negative per capita growth this year in 2020 and 2021. The African Development Bank, ahead of its June scheduled annual meeting in Malabo, Equatorial Guinea, maintains that East Africa will, as in 2018, outpace in declining order of growth North Africa, West Africa, Central Africa, and Southern Africa this year and next. Zambia, Treasury in the red. Africa Confidential, again, the liquidity problems are getting worse and state asset sales are looking more likely as a last resort to avoid debt default. The lavish spending and borrowing of President Lungu's government is starting to catch up with it. Apparently, in March, they had to raid the state pension fund, the National Pension Scheme Authority, to pay overdue February salaries for public service employees. I wrote about this. I was interviewed by Ronak of Business Day, and I said there is a big ticket blow-up in an African country might well be the catalyst to staunch this bull market. And I said Zambia looked like the most likely candidate. Of course, timing is always complicated, but you could see this problem was coming at us for a while. South African all shares up 11.39% year-to-date. Dollar Rand, we're right at the cusp. If we break down any more on the Rand, we're going to shoot higher. This thing could go over 15. Africa Confidential again. Others wonder if President al-Sisi, who has been working hard to legitimize the new military regime in Khartoum, forced through his referendum out of fear for his future. Indeed, he might have done. The Egyptian pound is steady, 17.17. Egyptian EGX 30 is up 14.15% year to date. Nigeria all shares down 7.19% year to date. The Ghana Stock Exchange Composite Index is down 6.49%. Congo drops mercenaries investigation of the opposition leader Moise Katumbi. Given that the President of the Republic has made easing political tensions his priority, we consider it inopportune to continue the investigation. Kabila, of course, outwitted Moise Katumbi in June 2016 when he removed him from the street and the Congo entirely. And I said at that time this might well prove a cleverly administered technical knockout. Indeed, it did. But he seems to be back. But look at this, a picture is worth 1,000 words. Kabila is sending a message by posing with all the DR Congo governors that he remains in control. How long will this last? I take you back to an article I wrote in January when I said Joseph Kabila Kabange, sporting a new sartorial look, was giving exclusive interviews to the world's press. In one interview, he alluded to Arnold Schwarzenegger's famous quote, "I'll be back." He clearly never went away. MTN plans a sale of its Jumia stake after the agreed lock-in. A sell down of the 19% stake in the online retailer could happen before the end of the year. MTN is the biggest investor in Jumia, the best performing IPO in New York this year, with its share price more than tripling since its April 12 debut. MTN shares have gained almost 7% since the Jumia IPO, valuing the company at 194 billion rand. The article in which I wrote about this was The Platform Economy. We, of course, interviewed the Jumia Kenya CEO. And as I wrote on the 15th of April, after the first day of trading on that weekend, I said Jumia is higher beta than Uber, but on balance is a buy as well on Friday's closing price basis. And indeed, it turned out to be just that. Investors, I said, are looking through the accumulated losses, seeing e-commerce penetration levels of 1% or less in Africa versus something like 24% in China, and betting that Jumia can parlay its first mover advantage into a seriously meaningful head start.